According to Monde, Palantir Technologies is rapidly expanding its footprint in the United Kingdom, and this surge in public sector contracts is drawing both praise and heavy criticism. In this episode, we will unpack what this means for Palantir as a stock, how it fits into the company's long-term strategy, and what kind of risk and reward profile may be taking shape for investors. According to Monde, the United Kingdom has become Palantir's second-largest market worldwide, trailing only the United States. This is not just about chasing a new geography, it is about embedding Palantir deeply into the digital infrastructure of a major Western government. For equity investors, that shift matters because government analytics and defense contracts tend to be sticky, politically sensitive, and often high-margin once the systems are in place. Monde mentions that Palantir's software is increasingly intertwined with core UK state functions. Think of health system data, defense-related intelligence, and broader government operations that rely on integrating huge and often fragmented datasets. In practice, this kind of integration creates a powerful moat. Once a government agency has built workflows, reporting lines, and even policy routines around a specific platform, switching costs become very high, both financially and operationally. From an investor's angle, that kind of deep integration can support recurring revenue, long contract durations, and strong upsell opportunities as agencies add new modules, more users, and additional data sources. It also underpins Palantir's strategic positioning as a mission-critical infrastructure provider rather than a simple software vendor. Markets often reward that kind of position with premium valuation multiples, especially if the company can show consistent growth and high renewal rates. However, according to Monde, the British expansion is not happening in a vacuum. It is accompanied by mounting concerns and public debate, particularly around data protection, civil liberties, and the potential for over-reliance on a single American company in sensitive national security domains. That tension between commercial success and political backlash is central to how investors should think about Palantir's risk profile in the UK. For context, Palantir has cultivated a brand around serving governments, intelligence agencies, and defense departments, originally with platforms like Gotham for intelligence analytics, and more recently with Foundry and its artificial intelligence platform for broader enterprise and government use. The UK has been one of the most aggressive adopters of these tools, especially in areas like the National Health Service's data environment and defense analytics. Each new contract signals that the British government is willing to entrust Palantir with increasingly important pieces of its information infrastructure. From the standpoint of revenue visibility, these kinds of deals are attractive. Government procurement cycles are long and complex, but once a preferred supplier is in, the ongoing spending can be sustained for years. The integration costs, training, and process redesign create inertia that favors incumbents. If the UK continues to standardize key systems around Palantir's platforms, that could translate into a durable revenue stream with incremental expansion built in. At the same time, Monde highlights that this growing reliance is triggering criticism from privacy advocates, some politicians, and parts of the public. The main concerns revolve around how citizen data is handled, who ultimately controls the algorithms and the insights they generate, and whether an American company with deep roots in U.S. national security should effectively sit inside the UK's digital nervous system. For shareholders, those concerns matter because they can influence regulatory scrutiny, contract renewal risk, and even reputational overhang in other markets. Let's break down the potential investment implications. First, on the positive side, an expanded UK footprint supports Palantir's narrative that it can replicate its US government success in other allied countries. If the UK experience is perceived as a model, it could help open doors in Europe, the Five Eyes intelligence alliance partners, and other NATO members. Each successful reference implementation in a major democracy helps Palantir pitch itself as a proven provider of secure, large-scale analytics infrastructure. Second, Palantir's positioning in the UK reinforces the idea that its software is becoming part of the operational backbone of public services. In sectors like healthcare, logistics, policing, and defense, once data pipelines, dashboards, and AI-driven decision aids are built on top of Palantir's stack, the real-world cost of ripping them out is very high. For investors, that means higher switching costs and a stronger competitive moat, which usually supports margins and makes future revenue more predictable. Third, the expansion helps diversify Palantir's government revenue base away from the United States, which reduces single-country dependency risk. If the UK continues to grow as a share of total government revenue, Palantir becomes a more global government tech platform, not just a US-centric defense analytics supplier. That can be attractive to institutional investors who value geographic diversification and global political relationships. Now, let's look at the risks highlighted or implied by Monde's reporting. According to Monde, the very depth of Palantir's integration into British state functions is what drives concern. The more central Palantir becomes, the more it turns into a political symbol. Privacy groups and civil liberties advocates worry about the aggregation of sensitive data, potential mission creep, and the possibility that powerful analytics may be used in ways that are opaque or hard to challenge democratically. For investors, that translates into several distinct risk channels. 1. Regulatory risk. Public and political pressure can push regulators to tighten data protection rules, impose additional transparency requirements, or limit the scope of contracts. Even if existing contracts remain, new business could be slowed, margins compressed by compliance costs, or certain uses of the technology curtailed. 2. Contract risk. Government contracts can be renewed, expanded, or, in some cases, re-tendered under political pressure. If a large and controversial contract comes up for renewal at the same time that privacy concerns are high, rival vendors or public sector tech teams may seek to break Palantir's hold. Even if Palantir ultimately keeps the business, the negotiation dynamics could become more challenging. 3. Reputational and contagion risk. A noisy political debate in the UK can spill into other markets where Palantir is bidding for contracts. If British controversies are cited in debates in Germany, France, or other European countries, that can slow adoption, especially in jurisdictions with strict data protection cultures. For a company that seeks growth across Europe and beyond, the reputational dimension is not trivial. 4. Policy mix risk. Because Palantir's business is so tied to government priorities, changes in political leadership can alter the trajectory. A future UK government that is more skeptical of outsourcing sensitive data infrastructure to an American vendor might choose to reduce expansion, bring more work in-house, or push for greater use of domestic or European providers. Balancing these factors, how might an investor think about Palantir's risk-reward in light of this Le Monde article? On the reward side, the article supports the thesis that Palantir is successfully embedding itself as a strategic technology partner for major Western governments. That embedding can underpin sustained, high-quality revenue with strong optionality for upselling more advanced AI capabilities over time. If Palantir continues to land more contracts in the UK and deepen its role in existing ones, it could become a quasi-standard for certain types of government analytics, especially in defense, health, and national security. This also intersects with the broader AI theme that financial markets are heavily focused on. Governments are under pressure to modernize legacy systems, improve data-driven decision-making, and leverage AI responsibly. Palantir offers a ready-made stack that promises to integrate old systems, normalize data, and layer AI on top, with security and access control baked in. Successful UK deployments help demonstrate that value proposition at national scale. On the risk side, Le Monde's focus on criticism is a reminder that Palantir's growth model is inherently political. Unlike a consumer ad company that can scale more quietly, Palantir's biggest wins are in domains where privacy, civil liberties, and national sovereignty are core political issues. That means that Palantir's valuation will always carry an implicit governance and policy risk premium. For long-term investors, the key question becomes whether Palantir's political and regulatory risks are adequately compensated by its growth prospects and the quality of its government-driven revenue. If you believe that Western governments will, over the coming decade, continue to centralize and analyze vast datasets to run health systems, border controls, militaries, and infrastructure, then a company positioned at the core of that transformation may have significant upside. If you are more skeptical and anticipate a political backlash that pushes states to reduce reliance on a single foreign vendor, the perceived risk will be higher. There is also a strategic nuance. Palantir's close alignment with US and allied security interests can be both a feature and a bug. For the UK government, that alignment may be seen as a strength, reinforcing transatlantic cooperation and interoperability, particularly in defense and intelligence. But for critics, it raises concerns about autonomy and the potential for cross-border influence over sensitive data environments. As long as these debates remain active, Palantir will face a complex stakeholder landscape that it must navigate carefully. From a portfolio construction viewpoint, the information in Le Monde's piece suggests that Palantir's UK expansion is strengthening the bull case that views the company as a long-term government AI infrastructure play. It also underlines that any investment thesis should explicitly factor in political and regulatory volatility, especially in European and allied markets. Investors who are comfortable with that profile may treat controversies as part of the normal noise around a company that operates at the intersection of technology, security, and public policy. Others may prefer more predictable, less politically exposed software names. Alignment between the nature of Palantir's business and an investor's risk tolerance becomes crucial. Before we close, it is worth highlighting a broader thematic takeaway. According to Monde, the British experience with Palantir reflects a wider global trend, governments outsourcing not just IT work, but core data architecture and analytics capabilities to specialized private vendors. As that trend deepens, the lines between public infrastructure and private platforms blur. For Palantir and its shareholders, that blurring creates opportunity. For citizens and regulators, it raises complex questions of control, transparency, and accountability. For investors, understanding that tension is not optional. It is fundamental to evaluating Palantir's long-term outlook. As more stories like this UK case emerge, they will collectively shape the company's reputation, its regulatory environment, and the willingness of other governments to follow the same path. According to Monde, the UK market is already Palantir's second largest globally, and its integration into state functions is deepening. That combination of scale and sensitivity is exactly why Palantir commands both market interest and political skepticism. Any investor following the stock should track not only contract wins and financial metrics, but also how debates around privacy, sovereignty, and digital infrastructure governance evolve in London, Brussels, and other key capitals. Thanks for listening to this episode. If you found this analysis useful, consider subscribing so you do not miss future deep dives into market-moving tech and policy stories.